If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Quant has dipped its toe underneath $100. In today's update, I'm going to show you the exact levels that need maintaining in order to pump above $150. So please stay tuned, help me fight the YouTube algorithm by supporting the channel and supporting me as a creator. What you could do is like, subscribe, comment and share. It does tell YouTube that you are enjoying these videos and gets them out to more like-minded people like yourselves. Now let's dive into this update. So we're seeing Quant dumping. I need to briefly go over to a H-bar chart just to show you the few differences that we're seeing. So with H-bar, I actually topped out at the 200 EMA, which signals that this is the top of our downtrend while we are underneath the while the price is underneath this point. It is in a downtrend, and we can see that after this rejection over here, we're expecting downtrend continuation unless it can catch support on this newly formed bullish cross. And if we can hold support on this bullish cross, we will eventually see a breakout, which we have seen today. But unfortunately, as it's a volatile, there's also some news. We need to wait for the daily candle close over here to close above this point to signal that this is actually a breakout and not a fake out. However, the most key points that I wanted to bring you guys' attention to is how we rejected the 200, the top of our downtrend, came back to key levels of support, then formed a daily bullish cross, which is attempting to break this downtrend, and we've seen the breakout right now. Of course, we need a candle close above, but this is what I wanted to show you over here with H-bar. Now, going over to Quant, it's a little bit different, guys. Can you see how we pushed through this level like butter? In fact, in the past, it was our top. We can see it eventually sent us to new lows. And what I simply don't like about these sorts of breakouts is that we need to come back underneath and test these key levels of support. I'd rather we just stay underneath, confirming that this is a downtrend, and then we change that by catching support, creating a higher low and eventually a higher high breakout, completely flipping the structure. However, this dump down is now bringing us beneath the 200 EMA, which would then suggest that this is the top of a downtrend. And this could suggest that this move to the upside is a fake out. And that is why in today's update, I'm going to show you the exact levels that we need to hold in order to break out again, just like we saw H-bar doing. And those levels are coming up very soon. So we're going to probably meet it today, one of them, $98. And we've also got one here at $95. Over the past few days, this has been dragging up, as every single day this average does move. And this is actually quite positive that it's above the purple box. This purple box dates back to the beginning of this year or end of last year. And it's marking out the $94 wick that we saw, I think it was November time of last year. So pretty much a year to date. And we've reclaimed that level pretty much like butter. The anticipation was that this could be a very key level of resistance and we continue lower. This could still be the case as of this fake out over here. I'd much rather have come down and invalidated downside simply by coming to the newly formed bullish cross and then breaking out again. But as we have now seen a push through this area, just like butter, we can clearly see that the moving averages that we need to confirm as support are beneath. So if this is actually bullish, we will catch a bounce between this $3 range of $95 to $98, where we see a breakout again above the 200 EMA. And only then we can be pretty sure that we are onwards and upwards to higher price targets above 150. So if we now come down to these moving averages and fail to break out again, something like this, then it would signal that this move to the upside, circled now, is a fake move. And yeah, it's just a bull trap essentially. So what now needs to happen is hold this key area support, break through the 200 EMA again and confirm its support. And only then are we in the clear. As of now, as we are again beneath this 200 moving average, we're back within the downtrend at the moment. This is a fake out. And what should happen is downtrend continuation. We're below the downtrend indicator over here, the 200 EMA. It serves as our top. Fake outs do occur, and if they do, we can see eventually, look, we continue lower. So we need to stop that from happening. The only way to stop that from happening is to catch support on this newly formed bullish cross. Because if we can reverse from this area, which is previously the whole entire year's key area of support between $94 and $100, and we've just breached that $100 area today. So hold this key area of support as our bottom, break through the 200 EMA to continue higher. because if we now get a bounce that fails to reclaim the 200 and we roll through the moving averages again, this would suggest a fake out. This would suggest further downside, where we would be targeting between $75 and $80. Again, we would technically keep those future high up targets valid, as this is the complete bottom of our range that we set in July 2022, and our top of the range is about the $230 mark. So we are within that, but it's important to now hold above this $94 to $100 area for us to just get these moves in the immediate short term. If we now deviate by closing below the 200, confirming it as resistance and losing this bullish cross, it would look for downtrend continuation, where we know this is where we must find support and then reclaim that $94 to $100 area to go up. Eventually, we are going up, guys. We can, of course, invalidate that. That would be by losing this low over here of $75 to $80. That would be us losing the range support. That sent us to the $230 area, which I actually used as a sell signal, and I've mentioned that in previous videos. So all in all, we're just waiting right now to see if this area can hold and we break above the 200 EMA again, because if it holds as resistance, there is further downside that we could use as opportunity. But for the moment, as we have reclaimed this $94 to $100 area, my anticipation is that it does serve as a bottom. So I'm looking for a bullish reversal within this $94 to $100 area of support over here. Again, you know the path to the downside if it's lost. You also know the path to the upside if it's being maintained. It's exciting times ahead, everyone. Let's see what this now brings us over the coming days. Let me know in the comment section below what you think is going to happen. Will we fall through or just use this as support? I'm more inclined to believe, as we've got a bullish cross, this should break out again. But this can all change, and we've got invalidation points, which would be the loss of the $94 support. While this bullish cross is valid, the belief is up, invalidate it, and we've got a new path valid, which is to the downside. Thank you guys so much for tuning in. Like, subscribe, comment, and share. If you want to get educated, message me with the links in the description down below, and I've got multiple things in place. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.